Hello and welcome to the Essential Six, our regular 6-minute briefing on the economy and trade issues. I'm Simon Hart, lead international partner at RSM UK, and I'm joined by Joe Brusuelas, chief economist at RSM US. As this is our regular 6-minute briefing, Joe, shall we get straight to it?
Let's get right to it because we've got some interesting things to talk about that are going to set the table for the remainder of 2020.
Okay, so the financial markets seem to be in turmoil right now, predominantly caused by what's going on in the UK. The risk of negative interest rates is dawning. What's going on, Joe?
Well, right now we're seeing a pronounced global move, a real risk aversion sell-off across financial markets. That's for two reasons. One is concern around another breakout in terms of the pandemic. In the UK, the R, or the reproductive rate, is close to 1.7, which is akin to a nuclear fire breaking out. That's got concerns that there's going to be more lockdowns in the UK, the EU, and potentially the US. You are seeing the damage in the most pronounced way in the financial sector. Banks are getting hammered this morning, and that's got to do with the concern that if there is another breakout, if the economies across the world do lose more momentum, you're going to see the Bank of England impose negative interest rates on its economy, and the financial sector is going to get hammered again as it bears the brunt of that adjustment. I can't tell you how important that is here to consider going forward with respect to what you're doing with your business and how you're allocating your portfolio.
So let's talk about that business aspect. I mean, a lot of people have been talking about different shapes of the recovery, whether it's a V, a U, an L, and you've been recently talking about a K shape, so the financial markets reacting in a completely different way to the real economy, the middle market. Negative interest rates from the Bank of England, is that going to continue this change of trajectory between the financial markets and the real economy?
Well, I think that what that does is it guarantees we're not going to have a V-shaped recovery.
Yeah.
And for the first time in this entire pandemic, and when we think about pandemic economics, you've got two different paths. The upper path of the K is financial markets and tech. It's like a completely separate world from the real economy where our middle market clients live. That's the lower path that looks like a Nike swoosh, right? Well, if we see the Bank of England impose negative interest rates on the economy, financial services is not going to look so good in a very short period of time. There's a lot of other noise going around about money laundering out of Europe, hitting Deutsche Bank. I think those are real secondary concerns. I think the major concern is central banks are clearly signaling they're expecting a real rough patch here ahead in the global economy. And it's not just the Bank of England, it's also the US Federal Reserve.
What's the impact of the Bank of England going negative on the Fed?
Well, then the Federal Reserve is going to be put in a position where they might have to strongly consider increasing the intensity and pace of their asset purchases in the near term. Then if we do have a second wave in the United States later this fall or in early to late winter, then all bets are off. The Fed could begin thinking about doing quite a number of things, perhaps capping rates along the yield curve out to 3 years or even out to 10 years. I think for the Federal Reserve, they'll likely take those first two steps before they would consider imposing negative interest rates, which I don't think is the best move policy-wise here in the United States at this time.
Well, I think we'll keep an eye on seeing what goes on when we talk next time. We'll expand on that a little bit further. I'm also just interested in terms of the UK has had 3 published months now of GDP growth. So we've recovered half of the cliff edge reductions in GDP output that occurred in April. Obviously, a lockdown is going to impact on that. But is there any good news based on that historic slight climb out of the cliff edge dip?
Well, most of the advanced economies of the US and the UK are operating around 80% capacity right now. The worst is clearly behind us. I don't think we're going to have another March, April, right?
Even with lockdown second spike.
Right. This is going to be the worst year for the US economy since the Blitz, right? 2020 is just gone.
Yeah.
I'm thinking, negative 6% decline, negative 10% decline in 2020, 6% rebound in 2021, and probably more like 4 or 5% in 2022. So we got to have that forward look. You will see the rebound, but we can't emphasize this enough. No vaccine, no recovery, right? No meaningful recovery. So the ebb and flow of the pandemic is going to be decisive on the margin as to how fast the economy grows or contracts. And again, until we get that a workable vaccine that's deliverable on a global basis, we're just not going to go back to those economies that we knew in 2019.
Yeah, it's going to be this ebb and flow, isn't it, until that vaccine. And it's not just a vaccine available to the US or the UK, it's a globally available vaccine, isn't it?
That's right, because we all operate on a global basis. Just like the price of oil is set globally, the impact on our economies is going to be decisive based on can we move about and do global business again. Can't emphasize that enough. A global distribution network, a global production network, and then follow-on healthcare that's going to go on for years is going to be necessary. My sense is that after the presidential election, probably in 2021, we're going to see a global conference to establish exactly that.
Thanks, Joe. Time's up. Much appreciated for your thoughts. I'll catch you next time.
Till next time.
Bye-bye.